Hello guys, I just closed out of this trade as you are seeing right in front of you, and I'm going to break it down so we see what's going on with Bitcoin. The last time I said Bitcoin was in a downtrend, but it looks like Bitcoin is I at this point I actually don't know whether Bitcoin wants to generally be in a downtrend or an uptrend. Right now, it's because there was a point where the Bitcoin was going down, and then all of a sudden it turned up, broke a level, and now it's going down again. I don't know what's happening to Bitcoin, but hey, with our strategy, all we need is a trend. Okay, so whether it's going down, whether it decides to go up, all we are going to do is we are going to trade it according to the trend. So I'm going to show you my strategy again, and then how I took this trade right in front of you. So you are seeing this is the trade. The risk to reward, simple 1 to 2, just got closed out, right? Full profits taken. So let me just show you. So I have marked out areas. So my strategy is very simple: break of structure, and anytime market breaks a structure, it retraces into a supply or a demand zone, and then we take the trade from the supply or demand zone. So basically, let me show you my strategy once again, as I always do in my videos. So if you want to trade this strategy, you can do same. So this is the structure of the market when the market is coming down, right? This is the structure of the market when it is coming down. So my strategy is that whenever the market comes down and then goes back up, and it is coming down again and it breaks structure, so this is what we call break of structure. So this was the low. Okay, when it went back, retraced, came back down to break this low, so we call here a break of structure. So whenever the market breaks a structure, usually it retraces into what we call a supply zone. And what is a supply zone? Basically, how to identify a supply zone is the last bullish candles that closed before red candles followed through. So basically, that's a supply zone. So I realized that whenever market breaks a structure, it retraces into a supply zone, and then it will come back to break the structure. So as far as the market is in a particular trend, you are always going to win trades. You are always going to take trades, right? So basically, that's my structure. So from here, you realize that at this point, this is the 1 hour time frame. No stress. You can just put it on any time. But if it's on 1 hour, it makes it a bit less noisy. The lower the time frame, the higher the noise, right? So it's better to keep it on a higher time frame. So basically, right here, you are realizing that the market at a point in time was in a downtrend over here, right? But when it got here, it was in an uptrend somewhere, let's say last week. Okay, the market was sort of in an uptrend. So what happened? So when the market got here, it retraced here. Okay, when the market got to this high, it retraced here, and then we'll see. So let me just mark it out so you see or you understand what's going on here. So when the market got to this high, it came back here, right? It came back down here. So we'll say this candle caused the break of structure, this bullish candle. So I'm saying that whenever there's a break of structure, the market is going to retrace back into a demand region. Okay, so in this sense, when the market is going up, the demand region will be the last red candle, this last red candle that closed before the market went up. So this red candle. So you see, when the market broke this structure, when it went up here, it came back here and then continued up. So basically, that's the strategy. No matter how small it is, you are sort of, once you identify the strategy, you are going to win trades. So exactly the same thing happened here. Okay, right? So we got here, market printed this high. Okay, this is a retracement, right? This candle is a retracement, and then this candle broke this high, right? So what happened? The market went up, retraced back into here, the demand region, and then the market went back up. But you see, when the market got to this level, it changed character. So higher high, the market was in an uptrend over here. So higher high, higher low, higher high, higher low. Went here, didn't close above. This is not a break of structure because it didn't close above it. Here printed another higher low, right? Higher high, higher low, and then went up here, still didn't close above this, so it's not a break of structure. Came back down, went here, started printing a lower high, and then printed below here. So right here is what we call a change of character. Why? Because if the market is in an uptrend, it is supposed to constantly be creating higher highs and higher lows. If the market is in an uptrend, higher high, higher low, it is supposed to constantly be creating higher high, higher low, higher high, higher low. Once a candle prints beneath this low, it means it's a change of character. It simply means the market wants to go down. So right here, when the market printed this higher high and higher low, okay, and then went up here and came back here, it couldn't print another higher high, and now printed a low that broke beneath here. So right here, I knew that the market wanted to come back down. So I knew that Bitcoin was coming back down. And indeed, what happened? It came back down, printed a lower low, went up to print a lower high. So you see, as it printed this lower low and went up to print this lower high, what happened? It retraced into a supply region. What is a supply region? The last bullish candle that closed before you saw red candles, and this is the last bullish candle that closed. So what happened? Indeed, the market, when it broke or when it changed character here, it retraced into this supply region and then came back down. So once we know the trend, all we do is wait for a break of structure and then mark out our supply region and expect market to come back in. So right here, the market printed this lower low again, went up to print this lower high. So now it is in a downtrend, right? Lower low, went up to print a lower high, came here, and this candle broke this low. So this is a lower low. This candlestick broke this low. So once it broke this low, all I had to do was to mark out the supply regions, and this is a supply region because this was a bullish candle that formed before the market broke. I mean, this is the bullish candle that formed, right? That broke the structure. So yes, indeed, when the market came down here, this candlestick wicked into it, so it retraced into the supply region. So you see, the strategy works. Now all we have to do is to mark out the break of structures. So the market printed this low, this candlestick, red candlestick, broke this low. Okay, so once it broke this low, right, what do we wait for? We wait for a retracement into a supply region. So all I did was to mark this 1 hour supply region right here, this 1 hour supply region here, this one, because what? A supply region is the last bullish candlestick that closed before the market printed red candlesticks, and market is going down. So here I marked this supply region. As you can see, what happened? The market indeed retraced into the supply region here, okay, and then came back down. I took the trade, and then my stop loss, my take profit was this low, and indeed the market just just right now, you have 20 minutes more for the candlestick to close, but as it stands, I've taken profit. Simple 1 to 2 risks to reward. So the market just gave me my profit, and we are good to go. So all I have to do is to wait for whether the market will still print lower lows, right? If there's a candlestick that closes beneath this level, not a wick, but closes beneath this level, all I'll do is to wait, and then where is the next supply region? This area will be our next supply region. Exactly this area will be the next supply region I'll be expecting market to retrace into. So when the market closes above this level, once it's going down, I'll just be waiting for the market to retrace here. Once it comes here and then it gives me a confirmation candlestick, I'll just take the trade and we are good to go. So basically this is the trade. Very simple. Once you understand and you know the break of structure, and you understand the supply and then the demand areas or the demand regions, you are good to go. I mean, you cannot be stressed. All you have to do is to wait for the market to come into your zones. As simple as that. So share your thoughts in the comment box. Thank you.